Is Accenture a buy right now? Everyone's ignoring Accenture. They say it's boring, no growth. I just put 4,000 of my own money into it. And in this video, I'm breaking down exactly why. Using the same exact 3-step framework that has my portfolio up 92% year to date, beating the S&P 500 by 81%. By the end of this video, you'll know, is the market timing right to buy? Is Accenture fundamentally strong? Is it undervalued right now? And what's my exact position? So let's dive into Accenture. If this kind of analysis helps you, be sure to hit subscribe. I do these every week. Step 1, check market sentiment. Before I buy any stock, I make sure to check these 3 indicators. 1, the fear and greed index. 2, the VIX. And 3, put/call ratio. Let me show you what each one of these tells us. Fear and greed index, 54, neutral territory. Here's what this means. When we're in greed territory, 56 and above, I stay away. The market is overheated. When we're in fear territory, below 46, I'm aggressive. That's when the best buying opportunities appear. With the market at 54 in neutral territory, it's balanced. I'm looking for opportunities, but I'm very selective. The VIX at 16. The VIX measures volatility. Below 20 means low volatility. Calm markets, good for buying. Above 30 means high volatility. I'm cautious. At 16, conditions are favorable. Put/call ratio, 0.61. This tells us what institutional investors are doing. Below 0.8 means more call buying than put buying, bullish positioning. Above 1.0 means more puts, bearish positioning. At 0.61, institutions are positioned bullishly. So all 3 indicators are saying market conditions are favorable for buying great companies at great prices. Green light on step 1. Step 2, analyze the fundamentals. Now that we know market timing is good, let's see if Accenture is a company worth buying. I use a 5-step framework. I'm going to walk you through each one. Metric 1, earnings per share. This tells us if a company is profitable. Accenture's EPS, 12.20. I like to see this above $4. 12.20 is excellent. This company is highly profitable. Metric 2, revenue growth. This tells us if a company is growing. Accenture's 5-year average growth rate is 9%. 9% is solid. I'd like to see it above 10%. Metric 3, price to earnings ratio, PE ratio for short. This tells us, are we paying a fair price for those earnings? Accenture's PE, 22, industry average, 18. We'll be paying above industry average, it's overvalued. Metric 4, free cash flow margin. This tells us how effectively a company is converting its revenue to cash. Accenture's free cash flow margin is 16%. I love anything above 15%. This company is generating a lot of cash. Metric 5, debt to free cash flow. This tells us how long a company will take to pay off all its debt using its free cash flow. Accenture's debt to free cash flow is 0.46 years. This means Accenture will take roughly half a year to pay off all its debt. Anything below 2 years is great for me. Less than a year is exceptional. Accenture passed 4 out of 5 of my metrics. The PE ratio is a little weak, but this is a quality business. Step 3, confirm with valuation. This is where I determine if Accenture is at the right price for me. I use the DCF model to calculate intrinsic value. This means I use the company's projected cash flow to show the true value of the stock right now. Let me show you exactly how I do this. I take Accenture's current free cash flow at $10.9 billion. Its expected growth rate between 3% and 30%. I'm using 3%. Discount rate, 8% is a standard. Terminal growth rate, 3% is a standard. And its shares outstanding, which is 680 million shares. And I project 5 years out. First thing you need to do is find your free cash flow with time, which is 5 years. That comes out to 12.63 billion. You're then gonna find your present value for the free cash flow. That comes out to 8.60 billion. Next, you're gonna find your terminal value. That comes out to 260.18 billion. And again, you wanna find your present value for that terminal value. And that comes out to 177.07 billion. You sum that together to find your equity value. You get 185.67 billion. And finally, to get your intrinsic value, you're taking your equity value and dividing by your shares outstanding. As we talked about before, was 680 million converted to billions would be 0.6806 billion. And that comes out to $272 per share for Accenture. I used 3% growth for this specific calculations, but we can range from 3 to 30%. 7% is the average growth for Accenture, so that would be a standard value to use, 7%. So according to my calculations, Accenture is 26% below fair value. I used to run this exact calculation on every stock I analyzed. but I got tired of doing the math manually every single time, so I built a custom indicator that does it automatically for me in TradingView. So we have step 1, market sentiment is favorable. Step 2, strong fundamentals. And step 3, 26% undervalued. All 3 steps passed. This is my time to buy. So here's what I did. I bought 20 shares of Accenture at $237. Total position was around $4,700. My target, $358, which is intrinsic value times a 20% margin. If I'm right and that reaches my fair value, that's a 51% gain, about $2,400 profit from this position. I'm risking the whole position size, and I never put more than 5% of my total portfolio into a position. So is this guaranteed to work? No, the stock market never guarantees anything. But this is the same exact framework I use for every single buy decision. If you want to see every position I take, wins and losses, I post them all on my Instagram and TikTok. Full transparency. Hit subscribe if you want more breakdowns like this.